Hi friends, let's take a look at TEZOS. TEZOS versus the dollar, TEZOS versus the Bitcoin. This is TEZOS versus Bitcoin just here real quick. Wanting to kind of get in with this one first off because we know that movements down below the 24 area that we spoke about were going to be significant. As you can see here, they were. We came down, and then as we actually went through this area, we saw the cascade toward the downside. So I gave that big warning yesterday. Now, how are we shaping up though? We've come in here and we've put in a low all the way down at 22.83, so 22,830, and we've got a little bit of movement towards the top side, but we're not seeing any sort of bullish divergence or anything particular. We really truly are at the mercy of the Bitcoin pricing for this one, because if we look over at Bitcoin, it's actually up there at 9,024. So while this has got this downward side price action, it's because we have relative stability versus the dollar with TEZOS, while we have the Bitcoin pairing going towards the top side. I think we're at the mercy of that coin. So while I have been calling 24K in Alamo, and as you can see, is for why there, that's quite well demonstrated, I do believe, and that's been useful for people as a takeaway value for their trading. Really, really useful. I'm going to just kind of keep on extending this Alamo town with us now and say that we'll only maybe potentially know where that is now from now on after this 24K one's been done. After that, where's the next Alamo? The Alamo within the Alamo, where's that going to come at? And currently, let's just keep calling it where we are at 2250, I suppose, and where we've been, and say then that, to be honest with you, if you want to get a 236 Fibonacci retracement, bearing in mind this is drawn in from these highs over there in August down to this most recent of low that we've just put in, encapsulating this downward trend that we've been in this entire time here, then what we're looking at is a 236 that's up there at 26,000. Now that's quite a way away from where we are just now, but movements up there would be very, very, very healthy indeed. In terms of from our lows, percentage-wise, that is going to be a 16% move, 17% move towards the top side, giving us three targets thereafter, such as the 382 coming in there at 28,700, which is a 30% move. The 50% Fibonacci number coming in there at 30,000 again, and that's a 36% move towards the top side from where we are now. And then the golden pocket zone coming in nearly at 50%, with a 48% move towards the top side in there at 33K. And that would still remain the ability to say that we're still in a downward trend, having not really changed anything massively from a macro picture, making this a really, really good asset for trading, even regardless if you're going to go counter trend here and look for the swings. Now, bearing in mind then there's various other targets to look at along the way. We had this movement towards the top side where things were looking, a wee bit more stable or else negative for Bitcoin, and the TEZOS prices were going kind of okay along the lines there on the dollars. You can see okay along those things. And we came in here and put in this high, and it wasn't bearishly divergent, and all that. And things were looking okay. But what there was in terms of warning signs was the fact that this ADX had stayed red and was still in chop territory on the 4-hour time frame. But then, with this most recent of price action, we have the negative DI going up and the ADX above 20, and in fact coming up here above 25 recently. So that's quite negative in terms of these lower time frames. So we have to look kind of beyond this and say, well, how was that then in terms of these lows here? Did we do anything? Well, we're still always in a negative stance. In fact, we're in a positive stance over here, and it crossed over in this zone, and the DMI was kind of just saying to us at the time, look, we've strength of trend towards the top side is all completely diminished. We've got this is the negative is crossed over. It's more likely, if anything, to be negative than it is positive at this point, but there's not a massively strong trend towards the downside. Now we have that. Instead, what I want to see is this get sucked back down towards the DM positive and the DM the negative DI. And the positive DI, and having had this come in at one of its sort of capitulation points potentially for us in terms of movements down, way down there, with the positive DI being down as low as 7.5. So we've had a real malaise in the price action over this last couple of months, which has been stronger, as you can see just in terms of the charting on this thing, stronger really than any of the previous ones during this overall rectangular box that we have just here. And we have broken down outside of the sort of Alamo for it. Could this just simply be a little volatility flux area for us with regards to how the Bitcoin pricing's had a green week so far? Jumping over to the US dollar pricing then, where do we find ourselves? And I changed over the pitchfork that we're looking at yesterday so that we could see, like, you know, where the outside zone. This is maybe going to be, while it's very positive stance on this thing, this could be maybe be a little bit more insightful for us just now. We've moved outside of this zone. I could draw in an extension to it so that we can look towards that, or in the meantime, I can just kind of check out how these line up from the other perspectives. You know, for instance, Schiff. This is original to begin with, just so you know. Modified Schiff and inside. Now, inside being kind of negative. And in terms of chain link, we've been in an inside pitchfork here for a while. I drew it in back there, you know, a wee while ago. So are we experiencing something similar to that just now with regards to these prices, and where does that position us? So let's start off with this type of mentality and think, well, if we do see more downside, which we don't really have, we haven't broken past the Alamos here, so to speak, in terms of the dollar price, and this is that dynamic that I was speaking about, really. If we did go down past this 236 and whatever else, perhaps we'd be looking down to about sub $2 point there at this point, you know, at that sort of $2 or perhaps sub $2 there in terms of movements for things. Now, that would obviously be very, very, very bad in terms of, you know, long positions here, leverage long positions, as we'd be looking at a movement down the way of 20% from where we are just now. So that would be shocking, but that would be, you know, potentially where we could be going if we were to see the negative. Now, let's just get back onto the positive story again, because there are a few more things that we can look to in terms of, you know, the shapes of this, like the RSI is moving up the way here. You know, we could maybe try and push outside of these zones, but we obviously have a clear downwards trend line here that we've not managed to break past yet. This has given us a second bite of the cherry on that just now, though, if I were to have this drawn in. I suppose I ought to draw it in because not everybody can see what I'm talking about all the time when I'm talking about something, obviously. So, you know, we've moved outside, we're outside of this sort of a zone here, and we're kind of getting a sort of second bite of the cherry and around this point here and retesting that. Can we move towards the top side, or is this going to be a really small time frame, head and shoulders type effort with these 2 points there? Going down to the 4-hour time frame, how does that look for us? Well, we've already had the play out from that, actually, and we've moved towards the top side. So that's that second bite of the cherry actually having fulfilled its promise there for us when we moved outside of this parallel channel on the 4-hour time frame. So that's the interaction there between those two. That's obviously a fairly esoteric point there, but that's what the interaction is looking like. Let's change this around then back to something else. I mean, I'm looking at this at the minute, and I'm going to make my decision based off of it, partly to do with there's almost no difference there between the two shifts with the Fibonacci zones and what we're looking at as well. So let's just go with a shift pitchfork for now and say then, yes, okay, so the 236 coming in right here at the bottom of our no, that's a 0. Sorry, it's at 2. I've been calling this a 236. I apologize when I withdraw that, and I don't remake videos. Everybody makes mistakes. This is me talking here. I was reading 232 here. I was getting distracted by the actual price number. That's a 0, you know, the bottom of it. Sorry about that. Anyway, I'm always real with you. And this is hopefully gives you a bit of confidence when it comes to doing your own charting. I really want people to have that takeaway value. Anyhow, movements down here below this area, of course, 233. That's going to be what I call our current Alamo, right? In terms of dollars, and we've not broken that yet. Well, we have kind of broken this sort of the equivalent area on the Bitcoin pairing as a result of the Bitcoin positivity. So we've got this rounding off at the bottom here. Didn't have a great big whack of bullish divergence across the board in terms of these oscillators at the time. Did get a sort of sniff of it here with the stochastics, but what I'm looking at here in terms of the RSI is how we have had this kind of upward structure here, kind of correlating with this, and we've just put in a low here, which is a higher low potentially after a higher high. In the 4-hour time frame, that'll be a bit more visible. We've had these highs on the way up, and then this low, while it has come down and been very threatening, is lower than this previous low here. Maybe this is the other low, and it's kind of like an equal or ever so slightly lower low than that, but that's kind of splitting hairs about things. Yes, but this is the low here. This can be a high and then a low. You know, so the lower high and then a lower low, a lower high, a lower low. Then we've got like this high, this low, and then this high and this low. In that sense, for us, And if that's the case, then we have hidden bullish divergence showing up here with these lows coming in on the RSI and the stochastics and whatever else, so all of these ones, the DMI and whatever else, and the MACD. And at this point, right now, if that isn't the case, though, what actually that's going to turn out to be is just convergence between this low and this previous low in terms of the debate about that point, saying that, well, actually, this is where we saw the prices turn around or something, and this, and then we push down past these areas. So the key areas to look out for in terms of just movements in the shorter term has got to be here where we saw this previous wick in at that 241 area. Of course, in terms of the immediacy of things, it's going to be in here at the sort of the point of control and around this area, just at our heads at the 252 area, as we know. Obviously, you probably feel it yourself as being important. And then the next area coming in at around about the 264 area, and moving up above them could see sort of continuation of the price action towards the top side. I mean, maybe it'll make it back into these zones that we've had up above us, given that resistance in terms of oscillators and whatnot, and hopefully then a recrossing of these positive and negative here on the DMI. The DMI. And perhaps this fading off, the ADX fading off there to go back down below 20 and getting a little boost, hopefully off of the oversold area, oversold here in terms of the positive coming down here into this oversold territory on the DMI. It's not actually technically called oversold, actually, even on that one, but there you go, just to get the message across to you on that front. Okay, so that's what we're waiting for. We don't have conclusive answers as yet as to the positive and negative on things. In terms of real small things, I suppose people maybe would want me to put my finger more on the pulse of something. And if we consider this to be then the broader structure between this last of the lower highs and the last of the lower lows, if you like, where we had a touch of the bullish divergence and whatnot between those 2 points there as part of the tail end of that downward trend, then we draw in a Fibonacci between the two highs and lows. Have I got that right though? No, I've not. Just down to here to where the pitchfork actually is. Then you can see that we're above the 236 currently. That's good, and that's at 243. So that chimes with those with these levels we're looking at. Then the 382, we're actually above that currently, but we're below the 50%. Now we're looking here between sort of the 250 and 255 areas. Moving up above that takes us into a golden pocket, perhaps to potential at our upper line. So you can see how the sort of interaction of all these different key areas for us, and that's what we can look to over the next wee while in order to trade this with success and alacrity. Looking at here at this parallel channel we've had in the background, no real surprises to see that we've got resistance in and around these current areas. That's actually coming because of this high here. It would have come in as being sort of a lower high throughout this period, until such times as we break out of that. So there's a bit, if you want to draw that on your own charts, you easily can. For instance, just using the 4-hour time frame and going down the way like that. Of course, that is, the Bitfinex chart on that one. We've also got another couple of things. We've done an 886 Fibonacci retracement here. I'm sure we could draw in a harmonic of some sort between this price action across the way. Get in touch with me in Discord or in the comments down below or whatever, and send me screenshots and all that sort of stuff of your things if you see something like that on the go. I'm not sure actually, but I contemplate the possibility of it. You can see though that this is a decent enough area for a retrace, and that movements up above this is going to give us a nice decent looking reversal if we do manage to do something like that. If we do movements up above our previous sort of high in terms of the downward structure here, the last of the lower highs, if you will, that 282 would be very much positive, potentially opening up the chances of us getting back into that longer term rise and wedge. Now, of course, this longer term rise and wedge does offer up the sort of the scary proposal for us, the possibility of being able to sort of look down the way at very, very much negative targets. So we would be remiss to not mention them. I'll use this same Fibonacci here that we've got drawn on in terms of the movement up the way to give us this downward side targets. And of course, the 1618 is at 85 cents. The 1414 is at $1.27, and the 1272 is at 159. And those would be, contemplative targets should we actually move down below the $2 area. The one on that, the 100% area is coming in at $2.22 on that one, by the way. But if we were to, move down past $2, then you could look towards them perhaps as your subsequent targets. But we're doing okay currently, and movements up above 282 going to be very much positive for us in terms of the broad structure of things. And being able to recapture some of the lost positivity for us. Okay, that'll do for that. And we'll take a look at Ethereum real quick. Oh, had a big old wick down there, didn't we? Wonder what that was, if that was a liquidity issue or what. Looks like it must have been. Yeah, we're still doing what we said we'd be doing. And it's still looking the way that it was looking. With this being potentially, quite bullishly divergent, it depends on how this weird old candle actually was formed with the RSI. You can see here between these two lows, depending on how that all worked out there. What's we looking at? It looks like an erroneous candle, mind you. I know that must be very, very small for you on your screens, but what are we looking at here in terms of this sideways action? Just going to have to say, movements beyond these zones are just going to, until we've actually moved beyond the 0.0075 or indeed the 0.0060 area, we're not really done anything dramatically different, really. Actually, no, let's call it 65. So 75 and 65 are the two areas to really be keenly aware of. 70, opening up the opportunity to go up towards that, or indeed as in around that zone for playing support and resistance. So I'd look out for that if you're trading this. I don't think anybody actually is. There's the potential for this to be a bottom in structure here. Okay, there is the potential for it, but it's not going to look good until we've gone past the 75 area. Really, that's all it is. And it would all very much look just like, nothing special until such times as we've gone past the 65 area, when it would look quite negative. But if we wanted to see something like this kind of happen, then we're going to want to see a bit more, would have been nice to have seen some divergence in the run into it, which we don't have. Would be nice to see a decent pattern on there, which we don't have. Right, but anyway, that's all good. I'll tune in with you tomorrow about this. Let me know in the comments down below if you want any more detail on this one. I don't think anybody realistically does. It's just occasionally checking in is probably fine for it. 24-hour time frame. Zooming on in. Low, equal low, bullish divergence. Happy to see it. Movements above these targets, 70, 75, could very much lead towards at least coming up and getting our 236 Fibonacci. If I draw this in wick to wick and include that erroneous one, then you can see that this comes in here at previous highs, and it'd be much quicker and easier to get at 75. So that's what we're looking for. Cool. See you. Thanks so much for tuning in. I've been Rocky Outcrop. This has been 100% quality. I hope you like it, by the way, and that you share it with your friends as a result of getting some good takeaway value for you. I just want to say, by the way, that you are all really, really valuable to me. The idea that you spend, take time out of your day to watch these episodes with me really is a fantastic thing. I get a lot of self-esteem out of that. So I really want to say thank you to you for all of that. I really do appreciate it. I know that everybody out there needs a friend, and that I hope to be that friend for you. So of course, I've made a lot of friends so far doing this, and a friend of yours is a friend of mine. So introduce this channel to your friends, youtube.com/Rocky Outcrop if you want to do that. And I'll see you again tomorrow where we can kind of break this down a little bit more. Yes, things haven't been very positive for us. Yes, there is the potential, as there has been along the way, to see this turn around in terms of the counter trend, and really kind of at the mercy of terms of Bitcoin pricing to see that pairing go towards the top side, unless the dollar pricing really wants to shoot up, in and of itself, which could happen if we go past certain key zones for us. It could happen, as we've discussed, as we see Bitcoin, putting in highs at the minute. It's making it so it's like the extra work has to be done here to do that. We've had a green day for TEZOS, but it's a red day versus Bitcoin, so you can see that dynamic. Equally, it's red versus Ethereum. Where's Ethereum right now? At 370. So, yeah. So anyway, thanks so much for tuning in. Catch you later. I've been Rocky Outcrop. I'll be back again, and I'll see you when that happens.